Ever wondered why the six-figure OFM moguls have to rent everything that they have? Well, it's because 6 figures a month really isn't that impressive in OFM. My name is Liam Turnbull, CEO here at TDM, and in the last 5 years we've grown over 100 creators to the top 0.1%. Today we're going to have a look at why 6 figures is really not enough. Quick reminder while you're watching this video, there is a link in the description to our free Telegram community where there are guaranteed to be no upsells to our services. We take a weekly call on a Sunday in a seminar Q&A fashion so you can throw the problems at your agency at us and we will turn the solutions. The mogul aesthetic with OFM is very predictable and very much a front. There is a few components that go into detecting this. You can find rented Lambos, people using their Airbnb as their HQ, people wearing a Folex, people posting with fake dash, people captioning with Wi-Fi money. You know, this is essentially the mogul starter pack with OFM. But the reality is these moguls don't own anything. They are just glorified middlemen. They have no intellectual property, no brand equity. They don't own the platform. They don't own the product, and they don't even own the traffic. So when we've got a high churn hamster wheel that OFM is, really 100K a month doesn't move the needle. So let's break it down. Let's say that we've got an agency that have 100K a month worth of creators or just a 100K a month creator on their books. And so they are officially a 6-figure OnlyFans agency. Now that 100K gross immediately falls to 80K when we've got the platform fee of 20%. So we're already down to 80K. Most people tend to take around 30%. I think some people will be able to push 50-50, but there are also many cases where actually a lot of agencies are getting 15-20% and their only value add is chatting. So I think 30% is a sensible middle ground that we can use as an average. And so we take away that 30%, which is 56K out to creators. We're already down to a very small amount. Then as part of your offer to creators, they'll often expect 24/7 chatting. So if you're going to run a team of VAs amongst, 3, 4, 5 accounts, then you're looking at around 10 grand a month with somebody to oversee that, a little bit of training, etc. Or even if you just want to get a couple of guys to work from the UK, you're still going to pay best part of 10 grand a month. We can expect a further 5K in marketing. So this would be hardware and software, accounts, proxies, anti-detect browsers, the actual promotion and marketing itself, maybe even a team member to run that for you. So I'm certain that we're looking at least 5 grand for that. And then probably a further 1.5K on top for all of the tools to go with it. So this would be things like your Notion, this would be things like your Inflow, all of the things that actually just help the business run. You're quickly down to $7.5K there, of which we're probably looking at around 5K pounds. So of your $100,000 gross revenue, you are left with around £5,000, and that's pre-tax. So with just £5,000 left, give or take a few grand either way probably, it's easy to see how the lifestyle that these guys live is really outside of their means. And this is a dangerous place to be because that 5 grand, once you've done your Airbnb and your Lambo, you're pretty much out for the month. And so I'm willing to say I'm almost certain that these guys aren't investing into the future, aren't building out their own brand equity or intellectual property that will help them leverage either the sale of the business or expansion into the new venture. Most of these guys are going to continue to run on this hamster wheel and pour alcohol over their Folex until eventually it all comes crashing down and they're back at the start, which is a dangerous place to be. And so when they say that they're building an empire, really they're not. They're just renting the hype. And the worst part about this whole thing is that market efficiency is going to mean this gets a whole lot worse. People used to charge 50-50 in every case. That was the standardized norm for agencies to charge creators. But now a lot of people have figured that because they can't add the value, their next best solution is charge less than the other guy, right? Because if I can't add any more value, well, at least if I charge less, I've got some sort of way to sell my service to that creator. So they'll charge 45, 40, 30, 35, 20. I've seen guys selling their services for 10%. Now look, I'm all for getting a few clients in the door and kickstarting your business, but most of these guys are continuing to do that to push up this gross revenue so that they can touch 500K a month. That's some guys verify for our monarchy, and I look at their situation and think, you're literally making the same as a junior dentist. Like, this is wild. And you've got a 500K a month agency that you're, posting mogul content around. It's wild. And so when we've got this environment where everybody's charging less and less and less, the perceived fair point of service value is probably closer to 20, 25, 30% now than it was previously 40, 50. So these guys are going to get their margins crushed even more, because for them to stand out as the cheaper alternative, they're going to have to come below that average again. And we're going to constantly see this get harder and harder. It also is going to cost more to market because the platforms are harder to market on. There are creators with more and more of a damaged past, meaning that they're likely harder to acquire than they used to be. So in an environment where it probably costs us more time and money to acquire each creator, certainly more money to acquire each unit of traffic, and the percentages are coming down, these guys probably aren't even going to get the Lambo and Airbnb in anymore before they're broke. Now remember, turnover is vanity and profit is sanity. And I wanted to give you guys total transparency. Here at TDM, we can push up to around 30% margin at our very best. We typically sit 28 to 30% margin with our creators. But what you've got to remember with that figure is that we are a big agency with big percentages. Because we have a lot of brand leverage and because we have a good spot in this space, it's easy for us to charge 50% and people go ahead because they know the value's there. We can also take advantage of bigger creators because a lot of the costs are fixed, right? Once you've got 24 hours of chatting, once you've got the account's hardware and software, you actually don't have to pay that much more in cost for the account to grow. And so where you're going to struggle is in those smaller creators. If you've got 10 creators at 10K a month, then that's a very tough place to be versus if you've got one creator at 100K, because then you've only got one lot of fees, one lot of accounts, one lot of hardware, etc. So when you get to take advantage of big creators on very good percentages, you can do 30, 35% margin if you really push the boat out. I've seen agencies that are doing 70% fees. We only do 50% max. So it's very easy to push up the percentage. But the reality is you don't have that leverage at 100K a month. So a lot of these moguls that are at 100K are probably taking advantage of, well, certainly taking advantage of smaller creators. My guess is that they've also got smaller fees. So that's where it becomes dangerous. I think a rule of thumb to use is probably 15% margin. So when you're looking at a guy who is 100K a month, really you can bet he's probably doing best part of maybe not even 15K a month. Now the main premise of this video is because I want everybody who watches this video to be careful who you listen to. There is nothing wrong with somebody posting a crazy lifestyle and spending all of their money on rented stuff, Lambos, Airbnbs, etc., because that's totally their choice. But what I think is really important for you to think about is, are they really worth listening to? Because if these moguls are pushing a course at you, is that not an indication that they don't have enough money with their main business and that they aren't as good as they maybe make out? And what you'll also find is a lot of these guys are telling you everything you need to know about how to go out and get creators, how to sell stuff, but they aren't really telling you how to keep it, which is probably why they're in this high churn hamster wheel to begin with. In this industry, like a lot of other similar industries, the hardest flexers are often the brokest individuals. So just keep that in mind when you're thinking about who to listen to, what content to watch, what courses to buy. Have your head switched on, use a 15% margin as a guideline, and I wish you all the best.